Today we are covering the American Opportunity Tax Credit, or AOTC, a crucial topic for your exam. This credit is worth a maximum of $2,500 per eligible student. The calculation is specific and frequently tested. It is 100% of the first $2,000 of qualified education expenses and 25% of the next $2,000. The exam will test your knowledge of what constitutes a qualified expense. These include tuition, student activity fees if they are a condition of enrollment, and course-required books and supplies. A classic exam trap is to include non-qualified expenses like room and board, transportation, or student health insurance fees, none of which count for the AOTC. You must be able to identify and exclude them from your calculation. For instance, if a parent paid $10,000 in tuition and $5,000 for a dorm room, only the $10,000 in tuition is considered for the credit calculation. The AOTC is only available for the first 4 years of post-secondary education. Expect questions featuring a fifth-year senior or a graduate student, neither of whom are eligible. It's a hard stop after 4 years, and the exam loves to test this limit. Another critical point is that the student must be enrolled at least half-time for at least one academic period during the year. The exam might present a scenario where a student is taking just one class, making them ineligible. A major area for confusion on the exam is who claims the credit. If a student can be claimed as a dependent, only the person claiming them, typically the parent, can claim the AOTC. This is true even if the student pays the tuition themselves, with their own money or a loan. The exam will try to trick you by stating the student paid the expenses, but if they are a dependent, the credit belongs to the parent. The AOTC also has a refundable component. 40% of the credit, up to $1,000, is refundable. This means a taxpayer can get this money back, even if they have zero tax liability. The exam will test this by giving you a taxpayer with a low tax liability and asking for the total benefit. For example, if a taxpayer qualifies for the full $2,500 credit, but only has a tax liability of $2,000, they can use $2,000 to eliminate their tax bill and will receive an additional $500 as a refund. To remember the key features, think of the phrase "first for sure." This helps lock in that it's only for the first 4 years of college, for sure. The credit is reported on Form 8863, Education Credits. Questions may also involve the income limitations. For 2025, the credit begins to phase out for taxpayers with a modified adjusted gross income over a certain threshold, which you will be provided with in the exam materials. The key is to know that a phase-out exists and how to apply it if given the income range. You must differentiate the AOTC from the lifetime learning credit, as you cannot claim both for the same student in the same year.